Let's get even more action as we dive deeper into the market close. Abigail, what were you watching?
Well, Caroline, we just had some breaking news in the last half hour. Bloomberg scoop, of course, around T-Mobile and Sprint. Take a look at the shares of Sprint popping higher at the highs, up more than 1%. This is Bloomberg has reported that the Justice Department is on the cusp of perhaps granting T-Mobile approval of the $26.5 billion merger deal with Sprint. And of course, one of the sticking points there was the sale of assets. And it looks like Dish will be buying some of T-Mobile's assets, which could allow this deal to go through. The Justice Department's goal there is to make sure that they don't become too large, that Dish will be the fourth largest wireless carrier. And let's take a look at a breakdown of this, because this is interesting. This has been one of the sticking points around this deal for the Justice Department. 31% of the wireless carrier market, Luke, comes from Verizon. Then we're looking at AT&T. In aqua and purple, or pink, we are looking at T-Mobile and Sprint. The other portion there, composition of many of the other carriers. But again, the Justice Department is looking to make sure that Dish will be the fourth. Interestingly, though, Luke, it is said sources inside are saying that Dish has giving up just enough assets to make sure Dish does become the fourth largest carrier, but not too big of a competitive threat. But again, the shares of Sprint popping higher on this news, Luke.
Thanks, Abigail. And now with the VIX with a 12 handle for the first time in about 2 months, I'd like to take a look at one of my favorite charts that kind of points to reasons why implied volatility at the index level in equities could be suppressed going forward. And that's because we've got earnings season in the window. As you see there in the late March period, we've got the implied correlations for the NASDAQ 100 and the S&P 500 there. You see them get crushed into the start of the earnings reporting period because investors know that stocks tend to march to the beat of their own drummers during earnings season, as you'd expect. So that keeps a lid on index level volatility. Now that we have the G20 out of the way, that's really starting to happen in earnest. On the right-hand side of the chart there, you see in teal, especially for the NASDAQ 100, you got the window of the big tech earnings coming in at the end of the month. S&P 500 also down. And it's said in a crisis, rather, all correlations go to one. And Caroline, the market continues to price in this is anything but a crisis. This is calm, smooth sailing expected for index level volatility.